Bitcoin will, in my opinion, reach six figures. Sometime later this year, it will exceed $100,000. I hold that belief. I think it's very possible that we may see a severe economic slump in this country, so that is the only condition I can put on it. It's not out of the question that we're dealing with an event where a financial or insurance institution goes bankrupt, bringing down numerous other institutions with it or threatening to do so in an active contagion. The other first principle is that the Treasury market must remain liquid, and they will print to ensure it does. In that event, I envision a severe drop-off followed by a V-shaped recovery. As a result, I think that a sharp drawdown would be a good opportunity to buy, as I am certain that the Federal Reserve and the Treasury will print more money than they have ever printed before, in multiples of it to keep this thing liquid. That concludes the loan inquiry and caveat. How much time does that take? When that occurs, no one can say for sure. Although I anticipate some volatility in Bitcoin prices, I anticipate that it will be for the better. I can't contain my enthusiasm for it because of it. The possibilities that lie ahead. Prominent macroanalyst and ex-hedge fund manager James Lavish has revealed his Bitcoin prediction for the year 2024. Lavish forecasts that institutions will start to allocate a larger portion of their portfolio to Bitcoin, establishing 1%, 2%, or even 3% stakes in Bitcoin through the ETFs due to the increasing institutional adoption prompted by the successful introduction of spot Bitcoin ETFs, would cause the price of Bitcoin to skyrocket. According to Lavish, Bitcoin will reach 6 digits this year. The sole obstacle he cites is standing in the way of this optimistic prospect is the economic difficulty of conventional funding. The value of Bitcoin and other assets might plummet if the market were to collapse during a severe financial crisis. However, Lavish views that occurrence as just another fantastic chance to buy in Bitcoin, as he is certain that its price would recover afterwards. Here are a few excerpts from the conversation in which James Lavish discusses the state of the macroeconomy and Bitcoin's enormous growth potential. When we talk about printing money, what we really mean is printing money using QE. Essentially when things are tough. Additionally, inflation is exacerbated if the money supply is rapidly increased, which is a crucial event. It has been witnessed by us. We are aware of how it worsens inflation. That is the subject at hand. The Federal Reserve simply enters reserves on their balance sheet to cover the costs, and then they pass those savings on to their customers. Plus, it's just new funds flowing into the system. Consequently, the money supply is increased. The growth of the money supply and the expansion of the Federal Reserve's balance sheet appear to have happened in tandem. You can observe a delayed effect where inflation begins to impact after the increase of the money supply, but we didn't discuss inflation in this thread. It was only focused on money printing. That being the case, knowing that is crucial. This means they can essentially create more money at will. Additionally, they have made similar claim on 60 money can be printed by us. That's our specialty. Therefore, we will never enter into a default. When will we not default? We print money for a reason. No sovereign nation would ever go bankrupt if it issued debt in its own currency. Why? The government can simply issue more money and purchase its own bonds. Take note of Japan's actions. What they've been doing for years is still being carried out precisely as before. That is precisely what is transpiring, and that is why they are encountering problems with it. Therefore, it is the task that lies ahead of us. Inflation, in my opinion, has persisted and is structurally high. Liquidity in the Treasury markets is essential, which is why we have that. Because we are not going to reduce spending, it follows that we must keep the economy and markets liquid so that the Treasury markets can keep their liquidity. We are already spending more money than we bring in, are obligated to pay for by law, including mandated expenditures, long-term contracts with defense contractors, and the current interest on our debt, which amounts to $1.1 trillion. It's crazy. I mean, even someone without exceptional mathematical abilities can tell that's not sustainable. So that's about it for where we are right now. In order to keep the economy afloat during these periods of shock, new currency is produced. A dysfunctional Treasury market is unacceptable. As an example, it must maintain high liquidity in order to function. They want to make sure the market keeps working smoothly, so they go in and buy bonds to inject liquidity. Banks regulated by the Federal Reserve Commission would use newly minted reserves to buy market bonds, including as treasuries and mortgage-backed assets. According to Lavish, the money supply is increased as a result of this action. The delayed effect, in which inflation begins to grow after the money supply expands, is discussed by Lavish, who emphasizes that this expansion of the money supply causes inflation. At the moment, this is the issue plaguing our monetary systems. To keep the economy from going into complete catastrophe, returning to our last topic, let's hear James Lavish again as he discusses and shares his enthusiastic sentiment about Bitcoin. In my opinion, many large-scale investors will begin to understand the concept of exchange-traded funds, ETFs, and develop 1, 2, or 3% holdings in Bitcoin during the course of this year and next. Particularly smaller hedge firms and family offices will do this. Additionally, smaller institutions may be able to purchase Bitcoin directly from the market, bypassing the need for exchange-traded funds ETFs. Plus, it shows that they're gaining a good grasp on it, which means they're also becoming used to the idea of taking the plunge and buying it outright. But I anticipate that trend to persist. Institutions are starting to trickle in now, but they will soon begin to pour steadily. And as these institutions begin to comprehend it, it is like a river of money pouring into the space. I already mentioned that they will adopt a position between 0.5% and 1%. Each day they will gaze at it on their sheets in the hopes of making a decision, sell it all, or make it a full position of 2%, 3%, or 4%. And that's really the direction we're going in. So if you view it that way, all you have to do is return to the basics. More money is flowing into the space, that's all. It follows that the price of Bitcoin should go up. Given the current level of liquidity, I am of the belief that Bitcoin will surpass the six-figure mark, regardless of the multiplier you use. We've all discussed multipliers. Sometime later this year, it will exceed $100,000. I hold that belief. This is, of course, subject to the sole condition that we do not experience a severe economic slump. That concludes the main points of today's cryptocurrency news. Keep checking back. For more cryptocurrency news, analysis, and perspectives, leave a comment with your opinions. Please subscribe to our channel and give this video a thumbs up if you enjoyed it.